Disney just fired 1,000 of its own artists so they could replace them with machines that learn to draw by copying their art. Here's the full story. So Disney's new CEO just fired 1,000 employees, and most of them were the artists who draw what every Marvel movie you love looks like before anyone even makes it. And some of them were even at the company for over 15 years. So the memo that they sent, and I had to memorize this, it said a more technologically enabled workforce, which is the most corporate BS language for, yeah, we canned you for an AI so we can make more money. Sorry. One of the most insane parts of this story, one of the guys they fired, Wesley Burt. He drew Loki, he drew Black Panther, Fantastic Four, a seriously gifted powerhouse of an artist. He was fired in a conference room with his own artwork painted on the walls behind him, which is so disrespectful, it's almost poetic. And I really liked what another artist also said, which was, you're replacing us with slop that was trained off of the work of the artist you just fired. So they're training the machines on the artists, and then they're firing the artists. And sure, it starts with artists, but it was never about the art. It's about anyone who makes something. Whether you're a teacher, a lawyer, a nurse, an engineer, anyone whose job involves their brain, there's now a machine that's learned how to do it by copying you. And it costs them nothing. But try doing it to them. Train a machine on Disney movies, put it out in the world, they will bury you in lawsuits because that's illegal. And the thing that frustrates me even more is Disney Plus launched at $7 a month. It's now $19 a month. They've raised the price 6 times in 6 years. Disneyland tickets, $224 now. The outgoing CEO, $46 million last year, all while firing the people who actually make the magic. What are we even paying for? It's funny how that works, isn't it?
All right. Let me switch over to my stock analysis website where I have Disney pulled up right there so you can see the price. We're going to do, Max is still amazing, of course, but we're going to click on the 5-year and I'm going to just let that sit there in the background while I talk, okay? So Disney is set to fire 1,000 employees in the coming days and months, and their stock is still dangling off the edge of a cliff. Some of these employees have already been given their walking papers, but the word on the street is there's more to come, right? So as you see there, some people have already been fired from the artist teams and various different departments within the company. And today I want to talk about it, right? Let me sum up what the intro was about really quickly. Let me just sum it up for everybody. They're basically saying, Disney is basically saying to everybody that they're fired, that they're firing and that they have fired, hey, we now believe that we have the AI technology to do your job effectively. So we will no longer be needing or requiring your services going forward because we have machines that can in fact do what you were doing for us. How's that for brand loyalty? How's that for brand loyalty? Disney is one of the most iconic entertainment companies and brands in the entire world. When you hear the name Disney, some of you might think Mickey Mouse. Others may think Marvel. Other people may think Star Wars. And I'm sure that everybody knows about the iconic Disney World parks, theme parks. At some point or another, your family, or maybe even you, have had the desire to have Disney World as a destination point, right? You wanted to go. You wanted to experience it. So why then has investing in Disney stock been such a massive disappointment over the last 6 years if they have all this history behind them? I mean, this used to be a popular buy and hold stock, but instead has underperformed relative to the market and has frustrated nearly all of its investors. And worse, if you've been invested within Disney or into the stock for the last 5 years, you've certainly lost money. You can see the chart right there for yourself. You've certainly lost money. So let's start at the top with the numbers, okay? Over the last 5 to 6 years, Disney's stock has largely traded either sideways or traded down, which means it's been bombarded with negative returns for the investor, you and I. Now, usually a statement like that is relative to your investing start date, right? But when it comes to Disney, it's just all bad. All right. The charts tell us that Disney stock has experienced a 45% decline over the last 5 years, you all. 5 years. And that the price levels of today are back near where they were years ago, despite enormous growth in the underlying business and the iconic brands that they hold. And meanwhile, the broader market, comparatively, like the S&P 500, has significantly outpaced Disney's stock returns, meaning investors who simply held Disney for half a decade would have done far better in a broad market index than they would have done holding on to this trash ass stock for the last 5 years. Now, don't get me wrong. There are plenty of people who have made money with Disney in the past, okay, from where they started. But right now, you're losing. Now, a big driver of Disney's mediocre stock performance has been its strategic pivot into the streaming world, right? Disney Plus launched with huge subscriber growth, huge, but it also burned billions of dollars in cash for years in order to build this up, which forced Disney to pour in a huge amount of capital into scaling their streaming service for the customer. So what did that do? Well, it ate into the profitability of the entire company itself. Now, during this transition, traditional revenue streams like linear TV, in other words, ESPN, ABC, were also under pressure due to the cord cutting and declining of ad dollars and AdSense revenue, right? That left investors staring at slower growth and rising costs. So even though streaming eventually did turn a profit, that profit didn't come fast enough or big enough to revive the investors' confidence. Okay? It didn't do much to revive the confidence that they held within the company for years and years. So when companies underperform, one place investors often look for compensation is the shareholder returns, i.e. dividends and share buybacks. Disney actually suspended its dividend for several years while it focused on this building up their streaming and eliminating a key reason by doing that investors were able to hold on to their stock. They only reinstated the dividend recently, and the buybacks they did execute were modest at best. So by contrast, peers in tech and media often continue rewarding shareholders through steady dividends and aggressive buybacks, which obviously widened the return gap, while Disney was over here cutting their buybacks and also cutting their dividends. Even beyond streaming, Disney's overall growth metrics have been disappointing. Okay, revenue growth over long periods have been weak, extremely weak compared to expectations for a global content powerhouse as they are. You know, especially say comparatively to a media streaming company like Netflix. The return has not been there for what you would expect. And while Disney's, their theme parks and experience business, while that has performed relatively well recently, those cash flows were overshadowed by their struggles in media, their struggles in film, and their struggles in just network TV segments. This is not what investors want to see from a company they were planning on being invested in for decades in the future. It's just simply not what they want to see. Investors want predictable, strong growth, and they want to see that strong growth manifest in the shares, right? And through much of the last half of the decade, Disney simply has not been able to deliver on that share growth on a consistent basis. They haven't. Now, Disney also faces structural headwinds. What does that mean? There is now strong competition in streaming everywhere you look. And that competition is coming from tech giants with massive cash flows who have already established themselves as a universal brand, such as Amazon and Apple. You know, in terms of what people are watching on a day-to-day basis, you also have to contend with companies like YouTube, for example, who has taken a massive amount of viewers hostage. My mother is nearly 80 years old, okay? And even she has started to watch YouTube videos over most other forms of media and just streaming content. She's like a YouTube junkie now, you know? So all of these increase risk and they dampen investor enthusiasm in terms of future performance. So when markets see higher uncertainty, right, and they see the valuations that are going forward, those valuations are going to shrink because people aren't confident in the brand anymore. So, you know, this also helps explain why Disney trades at a discounted multiple today compared to what it has in the past and its historical averages. Does that mean that it's time for you to invest into Disney while they're discounted and, you know, sort of beaten down in the stock? I don't know. That's a decision for you to process for your own goals and portfolio. But if we're being real, I'm going to tell you right now, I am staying far the hell away from Disney. They have completely, and I mean completely, lost my buyer confidence in their brand, and I have zero interest in returning as an investor of Disney. I'm sure that there are plenty of other investors who were burned as well within the last 5 years, 5 to 6 years, say, by Disney. And honestly, you know, if I'm just looking objectively at the company's decisions as a whole that they've been making in terms of exclusivity rights like Star Wars, Marvel, etc., if I'm looking at that, then I'm not even entirely sure I agree with their ethics and plan of action going forward in order to increase profitability. I can't trust them. In other words, y'all, I just don't trust Disney. I don't know what's going for. In the past 5 years, they've also had 2 or 3 different CEOs heading up the company. It's almost like you're looking at a train wreck and you're looking at people file out of the train wreck and they're trying to pick up the pieces of the wreck and put their lives back together again. And they just don't know which direction to go in. This is what I see with Disney going forward. You just don't know what you're going to get. You have no clue. So I have no confidence in Disney going forward. I don't know what they're going to do. They could be profitable. Hell, they could be unprofitable for another 5 years. Who knows? But it's a risk that I'm not willing to take. Not with Disney. There are far too many other better companies out there, far too many other better brands out there that I can throw my money in, that I have way more confidence in than I do Disney. But that's just my little 3 cents. Y'all let me know how y'all feel about Disney down in the comments. Let me know if you are an investor, if you have invested in the past, if you plan on investing in the future. Let me know if you're using this time and this opportunity as a buying point for your portfolio. And maybe you think that, hey, this is the point where you buy when Disney's down, and hopefully they can make you a substantial return in the future. Y'all let me know what y'all doing, all right? And I'll see you back here in the next one. Later, y'all.